What a good note looks like under the Dodd-Frank era. It's our opinion that a good note that's created, that's seller financed, and the buyer is a consumer, will have many aspects to it. Initially, it's going to have a disclosure in writing where the buyer verifies whether they're an investor or a consumer and signs under perjury. This is in the beginning of the transaction. That way, later on down the line, many years forward, that document is within the collateral file that distinguishes the status of the buyer. The second thing is a loan application, a full collateral file of qualifying for the buyer. I'll get to that in another audio. The note and deed of trust or the mortgage that's compliant to the state regulations. A lot of states have different rules when it comes to a deed of trust, where certain clauses and certain items need to be in that deed, and your vanilla note and deed of trust that you get potentially at a title company or online isn't going to have those clauses in it. All the escrow, the title work, the appraisal. In essence, it has to be a complete file as if the loan was a regular bank loan. And that information has to be approved by the seller, and there has to be documentation that both parties have received all of the items in the collateral file. The seller at the closing holds that file for their own purposes, for whenever if they decide to sell the loan or to market the property, or not the property but the loan.